Good morning, everyone. Welcome to the On Time On Target Morning Brief, where we invest with fighter pilot precision on a daily basis. We have a great show for you today. In the midst of the markets just screaming into the green this morning, it's a little bit confusing since we just had a big inflation number this morning. You would think that the markets would be selling off, but we're not. We're going higher. So really setting up for a nice Thursday today. That inflation number is, yeah, we've been talking inflation. There are some shortages out there. It's interesting. I had a little bit of an epiphany that would be, I don't, hopefully I'm not the first person to say this and then it becomes a problem, but because I don't think that many people are listening, but, imagine if the Reddit crowd and what they're doing to these meme stocks, imagine if they all decided to not go back to work and hold out for higher wages. Imagine what that could command in the marketplace. You kind of heard Kramer and the crew talking about lack of workers, shortages of workers. Imagine if that just went en masse, right? To a $15 to $20 kind of min wage sort of thing. That would be pretty interesting. You would think that they'd have the force to do it if they chose to. So instead of, why not make themselves rich with meme stocks first and then turn around and crush some businesses along the way? I mean, some could be able to handle it, but a lot wouldn't, right? So it'd be kind of interesting out there. So just my morning thoughts as I was taking a look at that and listening to what they were saying. But today we're going to talk specifically about Alibaba because we're trying to make money in your portfolio. Alibaba has been crushed. There's no way around it. It just continues down. There are there's some hope out there on occasion where it'll start going higher and then it continues to sell off. So there's some things going on in China that I think are going to impact the long-term health of Alibaba, but I'm going to answer whether that's a buy, sell, or hold this morning once we get into the show. We'll also talk about some other big retailers like VIP Shop, VIPS, which is also a Chinese e-tailer. We'll talk about Amazon here, and then of course we'll look at the chart for a KWeb. Also in the room we have the longs and shorts in there. I like the longs a lot better, especially since the market seems to be screaming higher in the past half an hour or so. So with that, if you're catching us on replay, thank you so much. Make sure you subscribe, hit the notifications bell. If you want to catch us live, $25 a month gets you in the room. What you don't see is a chat window and a Q&A window where folks can chime in with their thoughts, and I'll answer questions real time. So with that, let's go ahead and get started. All right, welcome back, everyone. Here is the lineup card for today, Thursday, June 10th. June is clipping right along. All right, make sure you have your call sign in there and your chat and Q&A window set up appropriately. Standard disclaimer applies as a financial education presentation. You have to do your own due diligence for acting upon anything you hear this morning. Full disclaimer information available at OTOTnow.com. All right, mission objectives today: grow our money, protect our money, live off our money. We're talking specifically about growing our money, and one of the biggest Chinese names out there is Alibaba. If you're not familiar, you can actually go to alibaba.com right now while we're talking. It is Amazon for China. It is bigger than Amazon, which is kind of crazy, right? But when you look at a middle class that I think is multiples bigger, I want to say 6 times bigger than the US as far as the Chinese middle class, you're talking about an amazing market of people that want to, and even though it's a communist society, it's about as capitalistic as you can get. In other words, folks are allowed to buy pretty much whatever they want. And if you look at some of the retailers that are out there, they sell a lot of trinkets, that sort of thing. Or if you've been to a local markets here, wherever your local is, those stores tend to reflect a lot of buying, right? So a lot of stuff on the shelves, a lot of flow through. So how would that apply to Alibaba and whether it being a buy, sell, or hold? We'll take a look at the chart once we get there. All right. Secondly, I've been talking to a lot of folks about construction loans. So as you think of some major themes that are going out in the world, you have suburbanization. I think I can say that now that I've tried it 50 times. That's the COVID-19 kind of induced moving out of the cities into the country. If I'm going to be working from my laptop anyway, why am I paying $8,000 for a 1,000 square foot flat downtown where I can't find anything to eat? Why not move out to the country and live the suburban life? with the rest of us, and not have to worry about the commute. So if that's the case, people are moving out. Also, home prices screaming higher, price of lumber screaming higher. Those sorts of things made current homes kind of unaffordable, if you will, for many. And a lot of folks are looking to go even further out and build, right? So that gets to the question of what is a construction loan? It is different than a mortgage, obviously, since there's no asset backing it at the beginning, but there is an asset that gets created over the time, over the execution of that loan. So it's a little bit different rules apply. Some people are surprised by that, surprised by the interest rate, but there's more risk there. So we'll take a look at that as well. All right, our flow for today: long, short, open, short, long. We'll do a market review, headline review. We'll go around and take a look at the long-term investments, which are those that have listed there. We'll get into the market execution. We'll take a look here in a second. I like the longs much better than the one short we have, but we shall see what the market does at the open. Oh, and contingencies and academic resources are standard. All right, let's go over to ThinkPipe's TD Ameritrade's platform. Here you can see, let's zip out to the 9-month, again, 9-month chart here in the S&P 500. We're going higher and thinking about getting to new highs, right? We've had a lot of congestion right here in the past, 10 days, been relatively flat, kind of a small channel trade, if you will. This could go either way. I mean, it could go down too, but every indication that it goes higher today. And I think with the S&P only needs a few points from making all-time highs. So once it does, then, new highs beget more highs. That sounded terrible. Markets move higher that are hitting new highs move higher, is my point. So I think we could see a move big up to the upside, right? I was just in Las Vegas. Obviously, the Las Vegas is wide open, if you will. So if other areas are reflecting the level of activity in Las Vegas, this is going to be an amazing, results period. So Q2 quarter two closes here in a little bit. We get those Q3 results in about a month and a half from now. I think it's going to be pretty amazing. I got your Apex. Let me hit. There you go. There's the longs and shorts again in the room. All right. So overall, things looking good for the market. Zooming in on the 5-day, you can see here's that move in the last half an hour. In the last half an hour or so, up pretty close to these new highs. So we shall see what holds today. All right. Here's what I'm thinking for the longs and shorts. This may change, but right now, here's that move up I was talking about, pretty significant in the S&P 500. For SNGX, looking at that going higher, just realize you have a small price point and you should be using the 3 or 4 cent stop, which is literally a varsity move here. So you don't take this if you haven't thought through what your stop is going to be. You take this with a 10-cent stop, and A, you'll never hit your target, but B, you could get stopped out on the downside. So just think about what you're doing if you take this. Microvision, and again, this is a long. Let's see, strong earnings in Signal Jewelers is the thesis there. Excuse me, SNGX, disregard, is a pediatric plans and healthcare provider, kind of a big deal, smaller name though. So just beware. Microvision was added to the Russell 2000. So you see the nice pop there based off of that announcement. So I like that one as well. And then fuel cells are short, FCEL. Obviously, you see it just had earnings and there was a revenue miss and earnings per share mismatch, if you will. So that's why it's getting hit, even though you see it's in the green that they beat earnings. All right, let's go over to, we'll be back to that in a minute. Let's go over and check out how the markets are doing around the world. Here are the, futures for us. Again, Dow, half a point in the green there, and then even the NASDAQ, which was down almost half a point, an hour ago, screaming back higher into the green. All right, over in Europe, mixed and light in Asia as well. Bonds hanging around at 1.58%, 1.5%. So we'll pause here for a second. So you can see the Treasury yields rise after the CPI post 5%. So that's a year over year type number. If you think about it though, 2% is the target, is what you're looking for inflation. 5% is kind of what, that's the print we had last month. Everybody kind of freaked out. Now I think people are like, okay, well, it's not going higher than 5%. So now 5% doesn't even bother us anymore. So, okay, 5% inflation across the board obviously would have an effect on everything. if that's true. And again, if you get Social Security or you're on a retirement pegged to the CPIW, you would see an increase of about 5% in your money as well. Again, that won't quite keep pace with inflation, but it's nice to have pensions like Social Security that are inflation adjusted. And again, that happens every year. It's announced in October and takes effect in January. But so the argument over inflation is the Fed or is the Fed not going to raise rates? What's going to happen? And I'm a big believer that the Fed, the last thing they're going to do is raise rates, right? So I think 2023 would be the earliest, and probably past that. So I think people are starting to believe what Chairman Powell is saying is that, hey, we're not going to raise these anytime soon. So let's find something new to talk about. So I like that. All right, oil over 70 and kind of hanging there. Gold and silver basically fractionally off. Crypto was back last night for Bitcoin after the news yesterday of El Salvador, whichever was the country, if I'm not saying it correct, picking it up as its national currency out there. So overall, pretty good news. Okay, here's the headlines for today. Widen this just a touch. There we go. You can see UPS got a big upgrade. I saw that earlier, and some others that are out there, as well as Zoom. GameStop has a new CEO and a new CFO that I think are hires from Amazon. So again, no reason why it's here. Predicting a 90% stock decline. This is exactly the people that are being targeted by the Wall Street Bets folks. But yeah, you just kind of can't short into this thing because you're being targeted. But obviously, it is a clear short over the long term. Okay, Clover Health is another one. It's a meme stock that's in play. Don't want to give too much time to these, but again, short is we don't take these long, if you will. All right, UPS 20% rally on improved pricing power. I do believe that UPS popped on that news. All right, here's your inflation print, fastest pace since the summer of 2008. It's interesting because if they use that analogy, there was really no inflation after 2008, 2009, 2010, all the quantitative easing, that sort of thing. Goldman CFO, negative consequences. Yep. Oh, here's an interesting one. So so if you think of individual balance sheets, pretty much everybody in and around the Austin area is now about 100K richer over the past 6 to 12 months. If the bigger your house, the higher that number is. But it's at least six figures for most people with any home at all, just because the market's been so crazy. So it's kind of interesting. Some things happen when everybody gets rich on paper by having inflation asset. Yeah, Huntsville as well there, Burner, I'm sure. Apex chiming in from Ohio. I mean, it's everywhere, right? So things change a little bit when you have a lot more home equity. You have more options to you. So, but anyhow, a lot of people are feeling a lot less nervous about their financial situation, especially if you own a house or two, in the case of some folks in the room, if you will. All right, let's go ahead and take a look at Alibaba, switching to our main theme. So is Alibaba a buy, sell, or hold? I will tell you it's a screaming buy here at this price, and it has been when it's gotten down in this area. When you look, we talked about asymmetric upside yesterday, expected value, that sort of thing. If you view 205 as resistance, it's not magic, right? Because the 205 people thought it was at 210, 212. And it retested a new low, and it could still go lower here. I mean, you are seeing downtrend lines. But if you think the resistance is at 205 or 2000, you're getting that asymmetric upside out of this investment, right? And when you really look at so from a chart, it looks beautiful. From a technical perspective, you have a forward PE of 17. When Tesla's is like 900, you're servicing the largest middle class out there. There's just so much to like with all of this. As you kind of glance at the ratios, remember black is normal and red is bad, green is good. You see mostly black across the board. The only thing that's red is returns. Well, again, that means it's on sale. And then there hasn't been really any returns on this. So it's been a money loser for at least a year. And then you look, there's hardly any short float out there as well. So anyhow, I really like it here. I know we need to close in on it. So we'll come back to it a little bit later and talk about some other things I like about Alibaba. But let's head on over to get set up for the day trade. Again, I like longs better than shorts here. And make sure that's shared out. So we've got 5 longs up in the room, maybe even 6, but we're going to focus on SNGX, again, small price point, and then that MVIS getting added to the Russell 2000 are probably the best 2 stories out there. We may switch off of this SNGX. We'll see how it acts. And then, of course, we have fuel cell over here as our short. Give me a second to get set up for the open. Good morning, everyone, and welcome to the On Time and Target play of the day. We have 5 seconds to the market open. We have 2 longs and a short. Here is the market open. So this is the overall 1 minute on the S&P 500. Obviously, things are going into the green. SNGX is a first long we're going to take a look at. Careful of the small price point. You're going to need to use a 3 or 4 cent stop here if you hop in on this. And that's pretty tricky to do. Microvision is a long. We like that it's selling off here. We're looking at probably a 25-cent stop. I'm not ready to just snag it right here out of the gate, even though it's kind of right at that point. So 22.35, 22.60 would be the entry. Yikes. I'm not being a little too hard to stab at it right here. Sorry for the chart jumping around. It'd be better if it came into this 22.5 level and hung out for at least a minute before we turn around and take this higher. All right, and then our short of the day is this fuel cell. It is backing up here because of the, the short covering. So it gets up, if it would hang up here in this range a little bit higher than where it is right now, you'd want to get up to about 10.30 or so and then turn around and take it short with about a 10-cent stop. All right, of these, I like Microvision the best. So 20.30, 22.30 is the low. So we're looking at 22.50 going back high to cover the low of the day with a 20-cent stop. Okay, there's a new low. So that number, those numbers are off. 22.10, so we'd have to go 22.35 just to the upside. 22.35 will be the entry, and this is long in Microvision. Okay, there it was. It just hit. So 22.35, you're covering all the way down here to 22.10. So we had the selling off that we wanted. So that is your stop. We're going long. So here's your arrow. Realizing with that 20-cent stop, it's pretty nice, right? So we can go from 22.35 to 55 is our first R. And then 75 second R. And 95 is your third R. So literally it was there, 6 minutes ago, it was up at this level. So really like the entry on this trade. And I think it's actually going to hit probably while we're talking about it, to be honest. So again, entered here at 22.35 and then exit at 22.95 is what, there it is. So there's our 22.95 trade, 3R and going higher. I wouldn't keep any of this. I would call it good. But that's about as fast as you can be in and out of a trade. So to recap, we opened here at 22.80 and basically we followed it down. We were going to take it here. We didn't. We waited for it to go down even further. We waited for minute 2, went all the way down. Once it established this 22.15 low point, we said, okay, 22.10 and then a 25 cent. Well, my math was a little bit off on the R's, but it still hit that 3R point either way. Because I used it was actually a 25-cent stop, even though I was saying 20. But either way, it shattered that. So you're back out if you did math better than me. But covered all the way down here to about the 22.10 point, took it on the way back up, which is an aggressive entry, and then you see how fast it can go up. So that's it for the trade of the day. All right, let's see. Fuel cell still going up. And again, this is 3 minutes into the day. We're already out and covered it. But you'll see that, well, this is still kind of setting up for a short. But this doji up here all the way to 1042 kind of changes the math. You would want it to be down here. So not going to call a trade there. Let's look at our SNGX. Yeah, you do. Well, you would have an entry here. It's really, you'd have to go 3 cents and it'd be here going higher. So if you entered at 130, the 3 cent stop would have to get all the way up to 139, which it did hit earlier today. not a very attractive trade. And again, the volume isn't like you're getting out of the microvision. Okay, let's go ahead and look at some of the other longs that we have here. We looked at SIG, or we talked briefly about it. That's the jeweler that I was talking about earlier that beat earnings. Nice couple dollar move there higher. That would have worked as a trade, actually. TAL, which is TAL Education Group. I believe that's a Chinese. Yeah, plus 3R. Yeah, stop at 25. Yeah, it's exactly. I just looked at the chat. Your math is better than mine, right, Apex? So 25-cent stop is actually what I used. But yeah, it shattered both of those. So very nice. All right, TAL Education Group, Chinese education company. There's several out there. LRN is probably my favorite. That's the K-12 education group. Let's see, Wish, WISH. Don't know what they do, but they are up as well. And then RH, Restoration Hardware, is up significantly as well off of earnings. But tough price point, right? It's up here in the 700s. So, all right. And then the shorts we had, fuel cell, kind of didn't work. I suppose, yeah, you'd still be waiting on it, that's for sure. We have cake, Cheesecake Factory. Got hit hard, but people are buying it, so it's not down nearly as much as it was. And then the last one was GameStop, obviously meme stocks, you can stay away. Ooh, look at this MVIS retraced all the way almost back down to the entry point. GameStop selling off, and again, I would expect to sell off even more so. It was interesting, if you heard them talking about the conference call, they really didn't say anything during the conference call, which I don't know. I think that's bad leadership myself, but then again, I like to talk. So, all right, let's switch over and take a look at what's going on. You see the market's going higher. So what do we have moving up? We have SE, Clickstream, Boeing moving up as well. There's the CLOV, which I'm in now. That's that Clover Health meme stock. Not me personally. FireEye, some other smaller names out there. NEO, Chinese EV maker. See Amazon and Google down here up almost 1%. Major holdings for almost everybody. There's Wendy's, meme stock on the way down. Beyond Meat, Nikola, Roblox, Trade Desk. Silver selling off a little bit. Again, silver and gold will sell off if inflation's not going to be a thing. Luckin Coffee's been on fire, so let's pull the Luckin chart. So yeah, nice 5-day move here from 751 to 950. So $2 per share move. So if you're holding way too much of this, like some of us are, that's a great move, if you will. And looks like it just broke into the green, going higher for today. So be nice to see this trend continue for sure, right? All right, don't see any major names. There's Alibaba sitting there basically even. And not too many names in the red. So when you really look at this chart here, what's that, 6 or 7 minutes into the green for the S&P 500. Dow's up 200 and yeah, Dow and S&P are up 2/3 of a point, NASDAQ up over 0.5%. So, all right, we'll leave that behind. Again, nice trade this morning. Hope you're ready for it because it did go kind of fast. All right, let's go talk construction loans. So if you ever want to build, and if you have experience in this room, go ahead and chime in with your experience because I have not done this, but I've talked people through doing this. So, you know, that makes me an expert, but I have not done it myself, so I haven't seen it play out. So when you go though to build and you want to get a loan, again, there's no asset there, but there is going to be an asset over the course of the lifetime. So it's a little different from normally if you go to the bank and get a loan on just your signature, they said, hey, I'll, $15,000, I'll pay you back, super promise. They'll give you like an 8% type interest rate. Well, with a construction loan, you're looking at around 5, 5.5, maybe 6, depending on your where you live. And the good news is you sign up for a loan for the whole course of building the house, and you put a little slop in. So you have a construction manager who says, okay, you're building 3. It's going to cost you let's say 200,000 to build your home, to keep the math easy. So you might take a construction out for 225, right? Because to pad yourself a little bit. And again, that's if you're not using any of your own money to do this. So you take out a construction loan. Well, it acts more like a line of credit because you don't start getting charged until you actually draw upon the funds. And if you have put something in, generally there's anywhere between 5 to 10 phases where the general contractor is going to go, hey, we need 50K to get started, then we need another 30K in 3 months. Basically, they do a capital call with you, and you put forward these funds so they can continue to the next phase of the project. If obviously you can't pay, then the next phase of the project just stops. So it's important you kind of have this figured out. There are some people that ask me, it's just like, well, I have 100K sitting in the bank that I know I shouldn't, but I don't want to put it into bonds. I don't want to put it even in municipals. I don't want to do anything with it. So they have it sitting in the bank. And the question becomes, should you use this to start your construction? And the answer is yes. I mean, you should put that money to work for sure. But what you don't want to do is delay the construction loan. So you can get phase one going with your 50K or whatever the cash you have on hand, but simultaneously and at the same time, which I had a friend that used to say that every time and would crack everybody up because it's redundant, but simultaneously and at the same time, you need to start your construction loan process because that takes about 30 days to get that loan. So start with the cash, but you don't want to hold things up. So you need to start the loan process as well. When you are done with your construction loan, i.e. now you have a loan, you simply refinance it. You could keep the loan, but you're going to be paying 5 to 6%, which you don't want to do. But once the house is built and now can get appraised as a home, then you can refi right back out of it and get yourself down into that 3-point range or even lower. If your goal is to pay off your house, if you want a 15-year mortgage, you can make that happen. Or what's happening with a lot of these new builds is people are using a construction loan to build out the house. Once the house becomes a house, then they sell their old house and just use the proceeds to pay off the construction loan. That's a pretty good cash flow thing to do as well. And then if you decide you want to get your money back out, you can just cash out refi. But that's not for everybody. I don't try, I talk folks into that if they like money. But if you like security of just having a paid off house, because that's how you were raised, then you can certainly do that as well. Okay, that is all I've got for the construction loan. Yeah, sometimes it's 25% down instead of just a normal 20. All right, and there's some examples if you want them. All right, that's all I got for you today. Thank you so much. Glad you enjoyed the trade, and we'll be back with you tomorrow. Have a good one. Bye.